Okay, welcome everyone. We'll start our lesson 2. Today lesson will go through LO2. As you know me, my name is Anjum Satar. If you have any question, please drop an email at ukversity.co.uk. Yes, we'll start our lesson 2 and I'm going to share with you the slide and then we'll go through. Okay, first of all, we'll do a bit recap what we learned during our last lesson. Always good to do a bit recap, so we can contextualize our discussion. So during our last lesson, we discuss about contract. We learn about the elements of contract. And we mention about tort law. And then we discuss few case laws regarding contract law and how we can and why people need to pay the penalties. Yeah. And we discuss contract. There should be offer, there should be acceptance, there should be a consideration. The contract can be void if there is not a sound mind, if there is no offer, no acceptance. We discuss about invitation to treat. That was all, in our lesson 1, in our discussion. Today lesson, which is LO2, learning outcome 2, understand companies and insolvency laws. That will be the key in our discussion, which is LO2, learning outcome 2. We've been given the indicative content, what we're supposed to be learned, formatting and financing administrative of companies. We'll go through. Key our discussion will be focused on the Company Act 2006. Company, we need to be registered in the company house, and we follow the legislation of Company Act 2006. Yes, with the public and private limited companies, public have the right to issue the shares, and private, normally the private investors, they registered in the company house as well, and this public limited company, they registered also in stock exchange. Okay, director and officer and shareholders, how we can remove them, what power they have. If we don't have a memorandum or article association, the written, the term and condition, how the company will run and operate, who will be, how many directors, where will be the office, all will be in our discussion. Insolvency, implication of the fixed and floating charges over the assets, company voluntary arrangement, administration companies, yes, receivership and compulsory and voluntary liquidation, termination of the company, which we can look around the priorities for the distribution and liquidation, right of creditor and employees, and bankruptcy and personal insolvency. So that's the key. So what is a company? Company is the legal entity. Can we see the slides? Yes.
Yes, you can see.
So company is the legal entity, so it have the legal personality. So it's, we can say, in other words, is artificial person. Yes, it's like should be treat the other human being equally. It's not actual person, but artificial person. Separate for those, who own and run day-to-day business. So we can look around the corporation lifting the veil. Veil, the word we use because it's a limited liability. You close, nobody asks you to claim the money from your personal asset. But if the director involved in the fraud and things, it can be veil. It means the limited liability can become unlimited liability. Yes, a lot of discussion at the moment, bounce back loan. So people want to close the company and they can't because the loan is connected to the personal and business. That's a lot of discussion going around. Records, articles, illustration, and those, that will be in our discussion. The company is a separate legal entity, separate form of shareholders, part of owner, directors, and managers.
Teacher, can I just query, is this applicable for any size company within the UK, or just based on specific sizes?
Yes, because Company Act 2006 is applied to the UK companies. Yeah. So we will look, the legislation point of view.
And does it mean that this applies to both large organizations that are on the
Yeah.
stock exchange, as well as small business owners who are set up as limited liability?
Yes. So like, any company which is registered in the company house, the
Yeah.
laws apply to them, and that is a private and public. We have a separate category. So if you want to register as a public limited company, you must need to be a £50,000 worth of investment. You have to show that money, you have to register in the stock exchange, then you have to do audit and all other legal requirement you have to meet for the public limited company. But the private limited company is less legislation, because the private investors, yes, the losses and things, show more private. So that's the key difference. Huh? So veil of corporation, when it can be lifted, the nationality, it's time of war, it is illegal to trade with the enemies. Yes, it may be possible to lift the veil of incorporation, so impute to the company the same nationality as its member. We can look around, and this is one of the case law. Defendant of the UK incorporate was owned by the 5 individuals, and the company corporated in Germany, and only one individual was the British, and he held 1 share. The claimant need to be not discharge their debt to the defendant since effective control, and the later was the enemy's hands, and hence, to do so would be trade with the enemies.
What does
So they can be, because we have a no in the UK. We have in the UK, so these are the liabilities. Uh, just 1 second, please. If you give me 1 minute. Huh? Okay, sorry about that. So what we need to do, type of companies, we have public and private limited company. Public can issue shares. Private, of course, is a private investor, unlimited. No need to be accounts, and by guarantee, yes, sometime, so it can be guarantee on this.
I didn't understand that the previous point, which was that if during World War One there was a shareholder
Yeah,
who
because the
was,
company was registered and the war happened between UK and Germany. So in that case, it become enemies. Yes.
yes,
So you're a director. You should, discharge your responsibilities, because if you're trading it, it's illegal to trade with the enemies of the country. Because now we have like, gov.uk is a control on it. Yes. So we can't really, trade with anyone without.
so
That's
similar right now. So a good example is right now Russia is at war with Ukraine. There are sanctions against Russian trading with Russia, and
Europe.
hence the
You're
UK.
you're absolutely right. So any British company, if doing the trade with Russia without the permission of the government, yes,
Yeah,
so that come under the same category.
so they are not liable if they stop trading, and the other party is also not payable for their
Yeah.
deal. So both
Then we we
deals
we can
has
we
been
can take.
cancelled.
Yes, because the reason is international trade and things. If we have agreement between, and then the sanction happen from the UNO, yes. So
Yeah.
that's other things which we need to look around the circumstances as well. Huh?
Okay, so both in the example that you gave in this presentation, both German company and the English British shareholder who were trading, both their deal was cancelled and none of them benefited, and
Yeah.
both of them made a loss.
Yes, if you do it, it's against the law then, because of course you're doing trade with the enemies.
Yeah, so none of them benefited from
Yes, sure.
taking any further action from doing this trade, and
Sure.
so they were reversed. Okay, so that's clear now. Thank you.
Welcome. Welcome. Okay, so private company versus public limited company. We know the private, simple, we'll go through even all the points we can, but the private limited is a private investor. Public limited, 50,000 invest. They registered in stock exchange. They can issue the share. They have to follow more legislation, but private limited, less legislation. They normally don't issue shares to the public. They have a private investors and things. So LTD, normally. So we can look around private versus public secretary. So in the public must have a one, must be qualified, need not be in the public private limited. Account must be audited, but in the private not need to be. There is a limit about the threshold. Must file the account within 6 months, and audit not required. The turnover, if we have a below than 6.5 million. AGM, annual general meeting, must be held. A resolution can't be passed. Written resolution can pass. Written resolutions. Yeah. So that's in.
Sorry, sir. Can I ask what qualification does the secretary need to be classed as qualified? So what kind of qualifications are we talking about?
Qualified mean, that's the have a commercial awareness of the business as the basic understanding to become a secretary. Like, if you're dealing, you must have a knowledge about the Company Act and the rules and regulation about the company. Yes, because it's a public limited company and you have to deal with the legislations.
So which institution do they need to be professional members in order to be able to be qualified?
To become a secretary of, you should have like a business qualification, or you have a Company Act, awareness. So like level 3, level 4 qualification in business management and the Company Act, that's the key.
Okay, and they get a certificate from who?
Yes. Yes,
Who
they can,
them?
they can is a financial institutions. Yes, they
So,
ask for certificate.
so
Like if you,
IFA, would IFA give you
yeah,
that?
yeah, you can become a secretary of the company under the qualification of, because you're learning about Company Act, you're learning about some legislations. Yes, that meet the requirement.
Once I pass this qualification, I can apply to become a secretary, a company secretary of a public company.
Yes, you can, but of course, there is a process of recruitment and selection and the meetings. Yes.
Okay. Thank you.
Okay, so the consequences of incorporation, there are the number of consequences being separate legal entity. Yes, limited liabilities, company entered into the contract, company own its own property. Yes, company perceptuals. Yes, irrespective fate, shareholders, we need to be make sure the shareholders clearly understand the company suffer an injury. It's the company itself that take the appropriate, middle action. They known as like, here is the case law we have in the past. So that case law we can review. What was the rule versus in that, in general principle of the company law, that the individual shareholders cannot sue for the wrong done to the company or complaints to any internal irregularities. If is anything happen within the company, they have to take into AGM, and the AGM, annual general meeting, and the board will decide. Of course, they can raise the concern. The company laws, which is essential laws of governing and creation and operating the registered company. We have a different section of the Company Act, 1300 sections, 16 schedules. We have Company Act 2006 regulation made. We can look around the cases, classifying applications of the secretary duties, which we have from the director. Remedies, what remedies entitle in case of, if you don't meet those requirements. So we have to look around the these legislation. The company law include the part of securities regulation, insolvency law. Insolvent, like a company, would include the insolvency law and the securities regulation. Yes, we can look around the part of largest body of the law known as the capital market laws. Yes, we have money market and the capital market where we issue the shares and bonds and all. Because if you registered in the company house and the stock exchange as a public limited company, you can issue those bonds and the securities, you can trade them. And in case of insolvency, you have to declare all your assets and things. Other is a corporate governance, CG, how the company will be governed. That's we need to be transparent. We need to be follow those legislation. Any question?
The legislation we're talking about again only
we're talking about the CG, corporate governance. We have a different, like you have executive, non-executive members in the companies. Yes, especially public limited company, because you own the shares and you're a gen. There is a Gen C theory. You have to work in the best interest of the shareholders, not your own interest. Huh?
So
And
when you say they have directors who are executives, they don't sit on the board, they don't deal with the day-to-day running of the business.
yes, because there is the board, the non-executive members and thing. There should be executive committee, like when they declare about the like a bonus, like Barclay Bank CEO being paid 2 million pound bonus when the Barclay Bank not earned a single penny profit. Yeah, so this is a very poor governance. Huh? So governors decide, like executive and non-executive and members in the committee. You have a committee for benefits, authorize the dividends and thing. Declaring AGM, of course, happen and decide, how much we will give the dividend and the bonuses to the. It's not individual, especially Theresa May government is emphasis a lot because the more transparency. We have a Cadbury reports, we have various reports, those corruptions or Enron scandals and various scandals happen, to protect those.
These are all UK-based
Yeah,
case laws.
these
So,
are all the UK legislation.
so the company that is registered under corporate governance, both private and public, they would be required to have policies and procedures in place
Yeah, sure.
in order to be able to reach
Because
out to
they
the
they must have to follow the company act first of all. Yes, and then the nature of the company, you have to look around the insolvency act. You have to follow the company director disqualification. If they have a cross directorship, then can be conflict. Huh? So those, the issues. Old company act we have a 1985, but we are following now 2006. Criminal justice act in the company, insider dealing, like dealing with the companies and pretending and back end commission. We have a bribery act as well. We have a financial services and market act, more transparencies. These different legislation the company must need to be followed, or the director can be charged as a criminal activities if they involve.
So is whistleblowing a
Yeah. So whistleblowing is the concept really is happening. You have a compliant. If the wrongdoing happen within the company, you have to be whistleblower. So that should be implemented within the organization. If the whistleblower not work within the company, no one take action. It should take to the regulatory body, which we call watchdog. Huh? Like it can be ombudsman, it can be company house itself. The company house can in place, CCJs and things as well on the company.
and depending on which industry the
Yeah,
company is traded in, they
yeah,
can
yes,
go to the ombudsman or
of
they
course.
can go to
You have to look around the regulator like FSA, yes, Financial Conduct Authority or Financial.
FCA, not FSA.
Oh, yes, because they changed the name.
Yeah, and PRA. What does PRA do?
Sorry, which one?
PRA. They're the regulators.
Yes, there are various regulators, like we have ombudsmans. We have a Financial Conduct Authority. We have a Market Competition Act, the regulator as well, Competition Commission, like merging companies, creating a monopoly. Yes, it shouldn't be happening. Okay, so we move to 2.1. Really, we have to look around. In 2.1, in lies we look around the requirement under the company laws, formation, financing, and administration of the company, limited liabilities, LLCs, PLCs, public limited companies, as we discussed at the top, and the why we form a company. What is the purpose? Why not sole trader, partnership? Yes, because we can look around the benefit of the companies compared to the sole trader partnership, because the company have a separate legal entity, company have a limited liability, company have no restriction on the number of the people or the shareholders. It can be millions. Yes.
Okay.
So in case of liquidation, the company's procedures, of course, we have to follow the legislation. Advantage of forming a company, maybe bring other advantages too. You will find easier to raise finance. You can formulate ownership. Voting arrangement can be in a public limited company. Legal and administrative benefit forming a company. Of course, a lot of it's a legal, people trust can be increased because it's a company registered in the company house. We know the director, their NI numbers and things as well, who is a British or not. Yes, company directors. So that's all the information available in the company house. How to form a company is formed, filing a series of documents with the registrar of the company. We can look around the company officially brought into existence with the certification of incorporation. So that's incorporate certificate if you want to open account. Those the things we need to be followed. Yes, form. There are different forms which we can look around the basic company's information which we need to be filled. The name of the company, of course, it can't be the queen or the king. We can use the name is, we need to check it is available. We need to look around the memorandum of association, which is mean how the company run and operate. Article association, day and day out operation of the company. And then normally the simple article, or you can write your own memorandum and you can submit to the company house. Any question?
So the difference between memorandum of association and articles of association, I'm not clear about that.
Okay, memorandum is what is the purpose of the company to be a company. Yes, what nature of the business. And article association, who will be directors, where will be office, how the company will be operate, when the meeting will be happen, that's and what nature of the business. So article association is more operational side, and memorandum is the nature of the business that you will be in.
Okay.
The name of the company, yes, the name of the private company must be in the word limited. Yes, no two English company can have the same, yes, similar sounding names. Yes, that should be. Lot of people, they carry on changing a bit, putting dots and things, but under the law it can be, because if you copy and case other company can say why you use the trademark, why you use my logo. Under the company law you are protected for these. Company Act, which we can follow. We can look around the name of the companies, same as like existing registered 12 months period. There the names gives to be misleading. That's we need to be that can be the misleading information or undertaking were given when applying the name. Yes, that's required to be approval, and that can be for the 5 years. If shareholders and the share capital, shareholders mean anybody who has buy the shares in the company. We have a registered capital. Shares can be two types. One is a preference shares and one is a nominal shares. So preference mean you have a fixed return with fixed dividend, but the nominal shareholder, they have a voting right. They can issue, they can give the votes. They don't have a fixed dividend. And these, we can consider different stages. Yes, the classes of the share. Any question, please? Here we okay, nominal and preference shares.
So preferential shares are given to those Sorry, do they buy those shares or are they given to the potential shareholders?
Or they can be given to the potential and they can be offered in the market, yes, which have a fixed dividend.
Okay, so these are based on
They don't have a voting right, they have a fixed dividend.
but they have
The share.
preferential.
Yeah.
They are given preference.
So,
of
yeah,
picking
so
them
they are given preference than the ordinary shareholder.
right.
Because they are taking, because end of the day, whatever we're doing and looking, risk and reward, yes, high risk, high return.
So they put in larger sums of finance into the limited company. So
Yes.
that's their reward. They get preferential rates and they get paid before anybody else.
Yeah, you're right.
By way of investors or shareholders.
They have a fixed rate normally.
Yeah. So they're guaranteed. Even if the company makes a loss, they are guaranteed to get a fixed income.
Yes, sure.
From their investment. Is that correct?
Yes, they get the fixed dividend if the company earn the profit.
If they earn a profit.
Yes, or even the previous year profit from the return earning, they can get the profit.
If the company makes a loss, then there's no dividend.
So even the company make the loss, if they have a return earning previous year income, they retain it, because always we not distribute all the dividend to the shareholder. We not give all money to the shareholders.
Okay.
Because otherwise we can earn million in 1 year and 1,000 in 1 year, or loss in 1 year.
Yeah.
So we have a consistent policy of dividend.
So they retain their earnings.
Return earning, because they carry on reinvesting and the value of the shares carry on going up, and the dividend people carry on getting slightly higher than the previous year.
Yeah. So they just have to be cautious and be prudent.
Yeah, you're absolutely right.
Okay, thank you.
So then we can look around directors who can be, if somebody is being criminal charge, previously be declined, we must need to be declared, and if you can't become a director. If being declared CCJs are fraud in the past, you can't be a director. Director who is an individual must be at least 16-year-old age. English law does not have any nationalities or resident requirement. Yes, anyone can be a director of the company. Yes, so protect director from the claims of wrongdoing. It could be personal liable. Yes, secretary, when forming a company, you also need consider whether you would like to be appointed the secretary of the company. The UK company may have a secretary, but there is a no longer requirement of private to have a secretary. Yes, but the public limited maybe does not have the one of the director and other individual, or maybe act as a secretary. That you can act as a secretary as well. One other factors can be considered. Yes, we have a minutes book, we have a registrar book, we have an administrative requirement to be met, in case and the company does not find itself to be breach of the Company Act.
Okay, so my understanding is this is only applicable where a company secretary is of a public limited company.
Yeah, you're
not
right.
Private limited company.
No, not for, because
okay, so that,
public limited have a more legislation than the private limited.
So that's why they have a secretary.
Because end of the day, they are getting money from the public. Yeah, it's a public money, so we need to be secure as much. So registered office, yes, it can be UK company must have a registered office in England and Wales. Yes.
Yeah.
And their address for the formal and the legal proceedings. So that's why some people keep their address in London. Company or a company can be operate, various. They carry on making the subsidiary companies. They registered in the company house. They have a board, constitutional document. The two key constitutional document the company required: incorporate, article association, and memorandum, as we earlier mentioned. Yes, so those is crucial. Article of association, contract between the companies and each shareholders, and regulate maybe how the company will be conduct, how often will be, like the more day in and out procedures in the association, and memorandum is more about the companies itself. how much registered capital, where is our office, yes, that sort of information is. Article association is often incorporated the secretary as a model articles. Model articles, those are available, just click the box, you can follow. You can amend them according to your own requirement as long which is fall within the Company Act. So model is alone and consider should be given to a range of use of article association can be put and how they can meet the needs of the company. Yes, you can change it according to own termination of the directorship, like you can put the voting right, you can put the time period. Yes, 2 years, after 2 years, every 5 years, we'll do the election in AGM. We select the new one. Yes, all the legislations can. Because end of the day, key purpose is more transparency, huh? More good governance. Then we have a 2.2. We can look around the role and responsibility as a director. So as a director, you need to be make sure is a more transparent in terms of the business Company Act, two bodies of the people, shareholders and the board of directors. So board of directors in the public limited company, they are agent of the shareholders. Huh? Actually, shareholders are the owner of the business. We can look around operational decision and various other tactical decision, top level decision they can director can make. Director to participate in the board meeting, enable the board to reach. But if like Tesco, they manipulate the profit turnover, there was 180 million, they showed 220 million. So that director can be charged as a criminal because they give the false information. They have their signature. Directors can set the committees and the board to be more. The shareholders and the employees both will be additionally rights and the duties beyond the purely connected with office as a director, because the director is agent, they have liable to be, they have to work in the shareholder wealth maximization. General duties as the company directors to promote the success of the company, to exercise independent, to exercise the reasonable care and skill and diligence to avoid the conflict of interest. Indirect responsibility can be done by the accountant, registered VAT, PY. Yes, paying the fair taxes, reporting, company files, self-assessment. Company directors can also be held, personally liable, act, omission committed during, some people say, I'll close the company, I'll will be limited liability, but they can be charged as a criminal if they breach in. Yes, bribery, money laundering, there have to be really strict rules in place in money laundering, like some directors involved in transactions. Yes, like giving the back end commission as happened with kings in Saudi Arabia. Yes, in the past, aeroplane back in 2012. Duties of the shareholders, they have a right to give the vote. Yes, they have a right to attend the meeting. They have a right to see the company information, constitution, documents. Duty of the shareholders, they pass the resolution. Yes, attend the meetings. They can, and they have a voting right if they have ordinary shares. If they don't have an ordinary share, then of course, extraordinary meetings can be called. If the more than 50% votes, must be favored and usually, displayed through the show of hands. And special resolution can be if we have urgent matter need to be settled, 75% majority of the vote in the favor. Any legislation or the rules need to be changed for the company operation. Okay, 2.3, then explain the process of insolvency. Even though the theory could, company does not tends to be continuous existent forever. Yes, either to be outlived or their usefulness to become a financially unviable, like a company, went into administration, liquidation. It can be because it's not viable to be. So we can sell the asset, we can pay off, the creditors, we can go through the liquidation process and able to pay all the debt in full. There are the solvent, yet the laws governing winding up solvent companies to be set up under the Solvency Act, in 1986. Insolvent company, the explanation of this must be, winding up the company. Normally, company meeting can be called. We look around the Company Act 2006, 85, Insolvency Act 1986, and insolvency in term of relevant, both the companies and the individual put. Then other, of course, we have to settle the debts. So first priority will be given to the creditors. Implies salary should be paid off. Then money left to the at the end will get the ordinary shareholders in case of liquidity.
So isn't taxation number one priority to settle payments? Or are you saying
Because of course when they are liquidate the companies and going administrations and all, need to be settle the things. So first thing, you have to pay your employees salaries. Yes, you have to look around the creditors. If you borrow the money, you have to pay back. Yes, you have to look around others. Then the preference shareholders, if you have to any money left,
So
that will
when do you
pay
pay the tax? When do
ordinary shareholders.
you pay the tax
Yes,
before
you
the
pay. If you have a liability already outstanding, you have to. But if it's that year when you're going to liquidate, or that years, of course, if you have a loss, that's why you're going to liquidate. If you have a profit, you have to finalize your accounts. Huh? That's
okay,
the
so
responsibility of the
the question hasn't been answered.
Sorry,
Which is the tax authorities, they are liable first, are they not? So before you pay anybody else, do you not have to first pay Her Majesty's custom and revenue?
yes. So
Revenue.
you only pay if you have a profit. So because you're meeting all the expenses, whatever left, that's the tax in. Then you have to pay the tax. You have to pay the tax before paying to the ordinary and the preference shareholders. Huh? Because the dividend we paid after the tax.
Yeah, net.
All other will be considered as expense. Huh?
Okay, so you can't pay dividends to shareholders until after you've accounted for the tax liability, and you pay the tax liability first.
You pay the tax liability first, and then you pay to the shareholder.
And you can't pay your debtors if it's operating costs. You can't pay them until you've paid the VAT first, which is also a tax. You can't pay your staff until.
Of course, VAT is a separate thing than corporation tax. Huh?
Yeah, it's still a form of tax.
Yes, you're right. You're right. So VAT every quarter we must need to pay.
And salaries, we can't pay our staff until we first pay the payroll tax first.
Yeah, because we have a tax, that's because on the salary you're deducting and the employer liability you have to pay. Because now we have a reporting every month, every 3 months. Yes, because in the past we used to do reporting once a year.
Every 3 months.
Yeah, so because no is a different legislation, HMRC, and now is a direct link with the software. Easily can tell what's your tax codes and things. More integrated system, so that's more digitalization. That's happening. Well done, that's you right. Good. Okay. Insolvencies and administration. Insolvency laws is highly detailed, specialized in the area of legal practice, which we can look around is a full understanding of the scope and complexity can be. Administration, the process, design and facilitate to rescue financially troubled companies. Liquidation, the process, the companies are wound up and close the business. And administration, liquidation process, liquidators and all settle debts. They find the buyers as well if someone buy and secure the jobs. Yes, security regulation, the aim of the security laws is essentials, to provide protections and decide to invest their money in the security. The term of the security cover the complex range of investment product like bonds and various others. Yes, conduct, investment business. Market is on the investment traded. We can look around increasing regulation of the companies who, yes, securities and the bonds, because that's, the lot of fraud, because the bonds sometimes they say secure, but sometimes asset you don't have it, they secure it again the goodwill, and they're saying goodwill. So we have a International Accounting Standard, we have IFRS, International Financial Reporting Standard, we have audit standards, and then this is the one of the things happened, global financial crisis back in 2008, and in the UK is reformed. A lot of changes happened in 2012, Financial Service Act. So Financial Service Authority, such as being abolished, and then the function has been split into the two regulatory bodies. So FPC, I think so you already mentioned earlier, yes, Financial Policy Committee. Then we have yes, Prudential Regulation Authorities, FCA, Financial Conduct Authority. These are all the regulatory bodies. And after this, because it's a lot of scandals happen, especially Enron was the biggest. Framework of the security regulation so which we can look around FSA and the FCA. That's renamed.
So Enron wasn't part of financial services.
No, because that was based in the US, really,
Correct.
Yeah.
So where IFA is only looking at UK. So
Yeah.
which is UK relevant? Which case?
Whatever legislation we are looking here in the slide, these are UK related.
Correct. So can you give me an example of a company which was in disrepute with the UK regulators? So you said Enron, but Enron is USA.
No. Yes, Enron is USA.
But which one is UK company which was disreputed?
Like
Can you give me an example?
Carillion Construction Company.
Carillion. Okay.
Yes, which is £2 million pension shortfalls. Went into liquidation, settled the debt of the pension, selling assets, money. Lot of government, even they've been called the financial director and controller. Yes.
And which banks would you say were discredited under the regulators and scrutinized?
A lot of banks been discredited in terms of PPI and various others. Yes, instrument being missold, not being properly audited. Yes, not being declared that the tax not being paid. Starbucks, Cafe, Facebook paid 4,000 tax when they earned 75 million. Yes, so regulator caught these and been fined. Virgin Media been fined.
Starbucks is American, isn't it?
Yes. So they, this moving.
So it's not regulated by UK.
No, but they are registered in the UK, so they have to follow the UK legislation.
Okay. Same with Islamic finance.
Yes. So
banks
Mudarka and Mazarfa and all, being set up in a way. Yes. So it's been becoming a part of UK financial.
Of the UK. Yes. Okay, regulations. But they haven't been fined.
Yes, because a lot of Sharia are the things embedded in a way in English law. Yes, so not 100% conflict. Yes, so if you do the finance through the Islamic finance, the name being changed in a way. So this is a term of profit and loss and things. So then we can look around 2.1 is a merit criteria. If you want to work in a solvency, we can define what the process. We can look around the insolvency laws, like which we earlier mentioned. We can always, when you do the merit criteria, always look, compare and contrast and add some examples, like we've been given the case scenario here. Yes, if the creditors are the debtors are the companies. Yes, in case of what we need to be, the debt is more than due 30 days. Yeah, dispute regarding the transaction and the debt is the debtors. Yes, has no valid defense of the non-payment of the debt. and of course, the creditors we supposed to pay and the debtors we supposed to receive. So that can be issues can be raised, and that can be done, on that. So these are different scenario which we can look around. 2D, if you want to work towards, the distension criteria, capital maintenance, increase assets. We need to be, financial statement really need to be true and fair. Under IES 1, International Accounting Standard 1, it says you need to be, information need to be true and fair. Yes, true in the law and fair in what we have here. Yes, so increase the assets from the sale of the stock of the shareholders. You can increase the cash, you sell the shares. Then of course your share capital increase, your asset increase. Decrease the asset, you buy the shares back. Yes, you have a less shares in circulation, you have a less cash. The company can buy and sell the shares, yes, to adjust the capital, because equity and debt. So we know about equity and debt capitals. Yes, equity means shares and the debt is mean bonds and all other. So debt financing is cheaper than equity financing. So reduce and cancel liabilities. We can return capital in the excess of the company need, because excess of the company needs is not good as well. That's why the sometime buy and rebuy shares, is carry on happening, because we want to be adjusting. Procedure, public limited company pass a special resolution, apply the court to confirm the special resolution if the reduction involve of one first two method above, the court must be required the company to settle, and the list of the creditors, if we have creditors, the court must not confirm the reduction until the satisfy the creditor is being paid off, because it's a company liability need to be settled. The company must file the document to the registrar of the company. The procedure of the private limited company pass special resolution to support solvency statement. Statement is, yes, sometimes it can be voluntary. Yes, like of companies, say we want to close it, so the company give the dates, if they have a debtors and things, need to be creditors especially need to be settled.
Sorry,
The
who imposes who? So I can see this third box: a solvency statement made without reasonable grounds is an offence punishable by fine or imprisonment. Who
Yes.
endorses this?
Yes, like a director of the company saying we are going to be insolvent, we want to close the company. Yes, because they're doing intentionally to hide the loan they borrow, the money, to get the financial benefit, because their liability is limited, but it can be veil. Yes, their liability can be become like drawing money for and then buying own house. Yes, and selling things, that can be is illegal to do so. It can be charged as a criminal. Copies of the resolution, solvency statement, statement of capital must be filed with the registrar within 15 days. So this is a process, days wise. Then we have a little additional information, trades and the shares, how we can look around and sell the shares. General rules: we can register, we can issue shares to the company, shares can be cancelled, shares can be buyback under the Company Act. And if you register in the stock exchange, you must need to be filed that your company want to be, because in future, and you have to call AGM. You have to make sure shareholder, and you inform the shareholders. Thank you. So you must inform the shareholders in your resolution, and the meeting should be called, because really it's all about more transparency. And when even we close the company, to pay what we supposed to pay, but in real world it's a lot of things happening. But the rules there, but then the court involvements and things, some people not go those lines, because it's a costly process as well. Any question?
Yes. So the shareholders, can there be entities that are recognized in UK law as not being human beings?
Because the Fair Treatment Act is there. Like we'll say, good need to be fit for purpose. You buy something and something being told this is for this purpose. If that purpose is not fulfilled, you as an individual, as a human right to be cancelled that contract. Yeah.
Sorry,
So
this is
exactly,
sale. This isn't about trading.
no,
Which
no, I'm
Sale of
saying, you
Goods
know,
Act
I'm saying,
for
just
purpose.
sake of example I'm giving, because the shareholders, it's their money. Yes. Because the
So
lot of company, they can inflated the value of the share, like creative accountant. Yes.
So creative accounting is not illegal, but it is not
It's
an
a,
acceptable.
it's a illegal. We have a lot of standard being set up that won't be happen, but it's not 100% we can say is eliminated yet. Yes.
Yeah.
Whenever incident happen, the new laws come to tackle the incident won't happen. So we are heading, but you know, it's a human make laws, human break the laws as well. Yes. They within that, you know, the area is a gray area really sometime carry on happening.
So this is why I'm getting confused. In shareholders, the idea is shareholders are people who have a certificate to state their title to the company, their ownership or their share of the ownership of the company. However, there are companies who are not people. There are other forms of organizations or entities that are not human, but they are shareholders of the UK company. How is that possible?
They are shareholder of the UK company. We're talking about the foreign company have a share in the UK company or just an individual?
Correct. So you're talking about different types of shareholders.
Yes.
These are not human beings. These are not
But they are artificial person. The company definition.
Okay. Okay. Got it. Okay. So as you explained earlier in the beginning,
Yeah.
under law, company law, a company is a separate entity. It's an artificial person. So as
Yes.
an
So they
artificial
should
person,
treat, you know, humans accordingly.
they can buy shares like a human being, but
Yeah.
they're not flesh and blood. Now,
Yeah.
I've seen in my career some people who have given their estate, which includes shares, given to animals, to their pets, and dividends have been paid by Lloyd's registrars, shareholding registrars, which is an administrative company, paying the dividends to the animals.
Yeah. So they thinking, you know, because the animal has the own right, they are receiving the money, and yes, but who deal with it? Animal don't deal its own. Someone deals on the behalf of them. Yes.
Yes, so they'll probably give power of attorney to a human being for that animal, so that in the
Yeah.
event
So
that they die,
there not lot of issues can be ethically and morally. Yeah.
that's the problem that
Yes,
I'm trying
that's
to
it.
understand.
Because
What is ethical?
ethics come under civil law.
Yeah, under Sharia, there are things that are moral and spiritual, but under Western culture, it's considered ethical but immoral and not spiritual. So there's a clear difference
Yes,
between
you're right.
both types of concepts.
Yes, so that's a huge debates on these things. Huh? Lot of research, you know, is happening, but unfortunate, you know, that never ever can't be really resolved in a way conflict. Yeah? These,
Yeah.
you know, in the real world.
Yeah, the real world.
Because corporate world is very complicated, really.
Yeah, it's been made complicated to hide certain things or to highlight certain things.
Yeah, basically, richer, big corporate, they want to become richer, ignoring something. showing something different, but actually applying things different. So like child labor, but is the child labor still happening? It's not mean it's finished.
Yeah, very good point. Okay.
Brilliant. Many thanks, and next lesson we'll go through LO3. Okay, we'll keep next week, same time, yes, 2:30.
After next week, Saturday.
I will send you the links, yes, and we'll do the lesson accordingly.
Can you send it to me now so I can at least make sure I get it?
Sure,
Thanks.
1 minute. I'll try to amend it and I'll send you a link. Huh?
And then in the meantime, do I start producing the coursework, or do you want me to wait and just refresh?
I mean, it's a good to be read the slide. If you want to type, you can. But I personally say you can wait, because we have a lesson which will be about assignment discussion.
Okay.
So that's, and I'll give you template. I'll give you old assignments as well.
Okay.
So and thus you can adopt it accordingly.
Okay. Do you want me to sit with other students? Because I'm at the moment just, you have classes in the morning as well with other students.
No, we have a classes for different modules, different units.
So am I the only one doing IFA?
I'm not sure how many. I'm doing corporate reporting as well. If you want to join, which is supposed to be 9 o'clock.
Okay. Can I join that as well?
You can. I will send you the invite too.
Okay.
So the invite is for this.
So corporate reporting is different to financial reporting?
Yes, this is slightly different, but it's quite similar.
Okay.
A lot of the material is overlap, like one subject to other subject.
Okay.
Okay. Any question?
Okay. So you've sent it by WhatsApp, the next lesson?
I send you via the message, but I can send you via WhatsApp in a minute. I can send you via WhatsApp as well. So just sorry, have you received in the chat box as well?
Chat box, I can see, but it's not giving me the hyperlink.
Okay.
I'm not able to get up. You know how it turns blue? When I'm trying to click into it, it just doesn't let me. So if you send it by WhatsApp like last time,
no problem, I can send you.
Then at least, if it doesn't work because the chat will close the minute you go off Zoom, it'll disappear. At least with WhatsApp, at least I have, at least I have a way to be able to connect next week.
Link for next week.
So this is for both.
Which I send you in the group. Yes, I'll send you separately in your. I'll find in your name.
Anish Patel, yes. You sent it to me last. Let me send you.
Yes, no problem. I send you now. I found you.
Okay. So this is for next week's law for accounting, and then you'll send me one for corporate reporting. next
Yeah.
week, 9 o'clock.
Yes, if you want to join, welcome. I send you as well. Huh?
Thank you, sir.
So about that.
Okay, this is lecture 3. So I need lecture 1 and lecture 2.
Yes, so we're doing 3, so I can send you some recording later on.
Okay.
Okay, thanks for attending and hope speak you next week. And if any question, please feel free, drop me text message. Thank you.
Yes, sir. It's very good today. Thank you very much. for the
Very well.
introduction.
Thank you. Enjoy.
Have a good
Thanks.
day. Take care.
Bye-bye.